The world is now in its third supercycle of economic growth, according to Standard Chartered. The first of these supercycles lasted from the 1870s to the eve of the First World War. The second ran from the end of World War II to the early 1970s, and the latest cycle started in 2000 and will last to at least 2030. Well, to tell us more, I'm joined by Standard Chartered Chief Economist Gerard Lyons. Gerard, does this mean that recovery from the current economic conditions is assured and that we'll see a smooth growth path from here?
Well, recovery is assured, but the timing, of course, is still up for debate. What we make clear in this report is that even though the world economy may be in a super cycle, that does not mean that everything goes up in a straight line at a rapid pace. Indeed, as we stress, it does allow for not only near-term uncertainty, but future volatility. Should be stressed that in recent years we've been amongst, if not the most pessimistic, one of the most pessimistic about the Western economies. We read the crisis pretty well, and indeed, in terms of immediate forecasts, we're still at the low end in terms of where we see the US and the Western economies, both in 2010 and 2011, and we're still pretty cautious about 2012. So what we're projecting here is perfectly consistent with what's just been seen in terms of the West, and what we expect will still be a pretty sluggish, below-trend, tough recovery in the West in the next couple of years. You
do say in the report that this recovery is based on a new world order. Is that one in which China is dominant and the East resurgent and the West languishing somewhat?
Yes. We tended in the last 4 or 5 years to use the phrase New World Order. It became more acceptable, more widely used earlier this year. But we decided and thought after further investigation that maybe supercycle better reflected what was happening relative to New World Order, because many people talk as if the New World Order means there's no volatility, but the business cycle does exist in India, China, as it does in the West. And also, very importantly, that even though we see this as a supercycle driven by the emerging world, the Western world can still do well within this. Indeed, the countries, in our view, that will succeed will be the countries that have the cash, the commodities, or the creativity. The 3 C's: cash, commodities, creativity. Many countries in the West don't have the cash at the moment. A lot of them don't have the commodities, but a number of them might still have the creativity in the future. So the West isn't down and out, but certainly the emerging world, led by India, China, Indonesia, will lead the way.
Just to ask you a blunt question, I mean, how do you trade this? You mentioned commodities there. They've been in a bull market. Does something like that continue? Where's the money to be found?
To answer that question, it depends on the tactics and on the strategy. The tactics will be driven clearly by near-term factors and what the markets have priced in. In answer to your question, the strategic aspect is clearer cut. You position yourself in terms of markets where growth is likely to be stronger. Many of those are in the emerging world, or in the West, in terms of companies that are geared towards the emerging world or are geared to the sectors that will do well. In terms of currencies, currencies will sort of see significant movement over time. Within the report, for instance, we have a baseline assumption that the CNY goes from 664 at the moment to 439 by 2030. The Indian currency, meanwhile, appreciates to about 35 against the US dollar over that time period. So currency moves linked into growth factors are important. And as you mentioned, commodities, there are certain sectors that will do well, and clearly commodities look like an outperformer, but they're not the outperformer. Basically, this is driven by a number of factors, so the investment opportunities are quite immense, as we talk about in the report.
Just finally, and perhaps a little bit philosophically, does this mean then that intellectual and economic leadership passes decisively from West to East during this period?
No, I think the likes of yourself and myself can still survive, maybe. But in broader terms, I think it does mean that there are much better opportunities. Basically, maybe to explain the underlying factors, this super cycle, in our view, is driven by a whole combination of things coming together. Some of the things seen in the first super cycle at the tail end of the 19th century, some of the things seen in the second super cycle after the end of the Second World War. Namely, the scale of the economies that are growing, the Indias to Chinas, the cash and financial resources to put money into infrastructure and to broader investment. Trade is a big issue, increased trade flows, new trade corridors, intra-Asian trade, Asian-African, Asian-Latin American, Asian-Middle Eastern trade, and also what I called inspiration and perspiration. The perspiration is more people working, more people spending, just the fact that there's more people, but the inspiration is the key in answer to your question. The ability to have the creativity, the ability to leverage off new technologies as well as existing technologies. I think in answer to your question, the West, if it doesn't have the cash and the commodities, still has to strive for the creativity. The emerging world clearly will move up the value curve, and what we see is many countries trying to move up the value curve. So the baton is in some respects passing already to the emerging world. This last calendar year, the emerging world, which is 1/3 of the world economy, accounted for 2/3 of its growth. That will continue in the future, driven by many factors, including the innovation and the creativity.
Gerard Lyon, Standard Chartered, thank you for your perspiration and innovation today, and thanks for being with us. Stay with us for news updates on the hour. I'm Steve Clark. This is Reuters.